and CEO of Calon Ventures, and they've done many amazing ventures through the years. They've invested in companies like FinChatbot and Ozo and various other companies. You can go check out their portfolio on the internet. So welcome, Clive, and it's great to have you.
Yeah, thank you very much.
We're just going to touch base for all those aspiring entrepreneurs, whether you have your own business or whether you don't have your own business yet. Just touching some of the key lessons learned from a successful man himself, and just some of the lessons you can take from his life and his experience. So, what would you say, Clive, is, if you had to pinpoint it to success of a founder, what is the key takeaways, and why are some founders just so successful and some businesses just don't make it?
Yeah, look, I think if I summarize it in one word, it's hard work. You got to put the miles in to get the rewards. But if I look at entrepreneurs when I make an investment, and I have been doing that for many years, I look at what I call the 5 C's, and what I look for in an entrepreneur or myself, what I gave to investors when they invested in me. But I think number one is coachability. One of the most important things about entrepreneurship is you don't know what you don't know. So even if you're on your third rodeo and your fourth rodeo, and most South African entrepreneurs, in all honesty, on their first rodeo, they haven't been through this before, and it's really hard. It's hard to know what's coming tomorrow. It's hard to see the blind spots that you don't have. It's hard to see the potholes in the road. It's hard to see when the road goes left or right. So the first thing I'd say is an entrepreneur needs to be coachable. When you go into a meeting with your investor or with an advisor or anyone, leave your ego at the door and be open to feedback. At the end of the day, you're the operator, you're going to make the decision, but just be open to at least listen to what the advisor or whatever has to say. Stand on the shoulders of giants that have come before you. And that's what I always did throughout my career, is I found those giants and they mentored me and I climbed under their wings. And that's how I created my wealth and how I created my success through the years. But I learned that you had to be coachable. You have to sometimes just bite your tongue and listen to what other people have to say. So I think that's the one. That's the first one. The second one is you need communication skills. And when I mean communication skills are, I would say, number one is you have to, if you are a single founder or if you've got 2 founders, at least one of you has got to be good at sales. Someone's got to build the stuff and someone's got to sell the stuff, whether it's tech or whether it's a product or whatever it might be. But particularly in the tech space where you innovation led, there's that engineer that's building the tech and then the salesperson that sells the tech. So that's communication. You communicate to your employees to hire the best team on the planet. You communicate to investors to raise capital. You communicate to the press to get PR. So you're always communicating, and you need great, fantastic communication skills that you can really tell the story about your life, tell the story about the business, tell the story about your why. Why are you doing what you do? Why is it going to make a difference to the world? Because buyers today want to understand those stories. So communication is an absolutely critical skill that that everyone has to bring to an entrepreneurial company. The third C is courage. You need to have a lot of courage. You need to be able to stand up to the board, and when the board says go left, you say no, board, and you stay. And that courage says I've done my homework, and I think I have to stay right. And all the pressure you're going to be under, you've got to stick to your conviction of saying no. That's what I'm going to do is courage, and I've got this courage to do that. It's the courage to make hard decisions. There's a courage to let people go when they're not delivering. And there might be your friends that come for a bri on a Sunday, and you have to have the courage to say, look here, this is not working out. Unfortunately, I think you have to move on. And that takes an enormous amount of courage to do that. And I find with most entrepreneurs, when I go into their businesses and I say, well, how's that person doing? They say, yeah, they're okay, but so why are you keeping them? They're okay. Yeah, but Clive, they've been here for a long time and blah, blah, blah. But all the wrong reasons. So you need the courage to know that you have to fire as fast as you can. As soon as you get the gut feel that they're not right, courage takes to fire them, get rid of them. Because in any entrepreneurial business, those first 10, 20 hires are going to dictate the future of your business, the culture and the future success that you're going to materialize. I think the next one is like conviction. You need to show unbelievable conviction to your company. That's the tenacity to move on, tenacity to, when you see a door or a wall, you climb through it, you break it down, you fly over it, you tunnel through it, you find a way of getting past. You never give up. You just don't give up, because you just don't know. Success is probably around that next corner, and you could give up and never know that you're just about ready for success. So that conviction is it's absolutely it's essential. And the last one I'd say is charisma. You need to have charisma to really be a successful entrepreneur. You've got to be able to have that charisma to, people, when you raise capital, it's all about relationships. That charisma to develop a relationship with your investor. People, and charisma with selling to clients. People buy from people, they don't buy from companies, particularly when you're small. So you need that charisma and that charm and that whatever those other words are to convince investors to invest in you, to convince customers to buy from you. So those are the 5 things that I look for. There's a few others, but those are the 5 key main ingredients that I look for in the posture of an entrepreneur before I make an investment decision.
Well, that's awesome. That's a power session right there. You've probably seen so many startups fail, and if you could just pinpoint it to a few short reasons of why do some startups fail and why some not. So I'm busy reading this book, Good to Great, and it's already just touching on some of the aspects of why are some companies great where they were good, and why do companies fail after they were good. So if you can just pinpoint some of the reasons that founders and team members have to look out for, like, okay, this is probably we need to work on this.
Well, I think number one is, we invest in people. We don't invest in technologies. We don't invest in markets. We invest in people. So the number one reason I would say entrepreneurs fail is because they either try and take the journey alone. And again, as I said, if it's a tech company, someone's got to build it and someone's got to sell it. Rather give up equity, and as Good to Great says, get the right people on the bus. Once they're on the bus, then move them, they move them to the right seats on the bus, and then you've got the right team that's going to take you forward. So you've got to know it's all about the team. There's no I in team. It's a team. Entrepreneurship is a team sport. They might even not be a co-founder. Maybe they just hire your best sales director. Maybe you hire your best engineer if you're not an engineer. But you have to have the best team for the product that you're building in the marketplace. Now, if you don't have the best team, it's like going into a gunfight with a pocket knife. You're going to lose. You're going to lose because, believe you me, there's so much competition in your space. But you can beat the competition because the best team is going to, with the average product, is going to beat, not an average team with the best product. So get that team right, and I'd say that's definitely number one. And then there's so many other reasons, honestly, that companies fail. Founder disagreements, that you don't tie up your equity upfront in legal agreements, that you don't spend the money upfront on those legal agreements. So you have to really, plan to be a big company when you're still a small company. And you can't wait till you're a big company to become a big company. You've got to pretend that you're a big company when you're a small company and do all the right things, the registration, the legal stuff. And the other reason businesses fail is I've got this expression that the businesses don't fail due to a lack of product development. They fail due to a lack of market and customer development. At the end of the day, you've got to go to your customers and find out what they want and go inwards into your customer, backwards into your business to build what the technology or whatever it is, the products that's going to solve the problem. You can't build the products and then go and look for customers. Only Steve Jobs could do that and was successful. Otherwise, you can't do that. You've got to understand the problem and go backwards into your company and build the technology that solves a significant problem. And when I say solve a problem, I'm not talking about an aspirin for a headache. I'm not talking about a vitamin for that feels nice. I'm talking about an aspirin for a headache. You've got to scratch the itch. So if I've got a big headache, you've got to give me that painkiller that's going to solve and if you give me the painkiller, I'm going to buy from you because you're solving my problem. Customers don't buy features. They don't buy products. They buy solutions to their problems. And you've got to understand the problem so you ensure you can build a solution that solves their problem. So I could spend an hour on that topic, but it's such an important thing that rather go to the customers, backwards to your company and build the products and your products forward to the clients and try and sell them something that you've built.
Yeah, that's awesome. So just on Good to Great, I think one of the things that stood out for me was in the book it says, first find the people and then you solve the problem with those people. Because if you've got great people, you can find great solutions.
100%.
Yeah, and also with the customer journey, if you look at all these successful Jeff Bezos, they are super customer centric. So it's all about solving the problem, which is really great. I think something that many South African founders and entrepreneurs struggle with is definitely compared to the US is with funding. Early stage funding is especially much easier compared to South Africa. And, most people that I've even spoken to in my life and people I look up to, they say, in that early stage phase, you just need to get through that. So is there any advice you can give to, there's so many entrepreneurs who are just too early yet for most investors in South Africa, but it's just giving up is not an option. So what could you just tell those people that they just need to continue and maybe something they can focus on?
Well, I think, there's, if you look at the funding spectrum, so there's angel investing, and seed investing, which starts early. Then there's the game I play in, which is venture capital, which is more growth capital, so Series A. And then there's expansion capital, Series B, Series C, Series D. Now, raising capital too early, just entrepreneurs need to understand it's very, very expensive capital, because you're going to give up 40% of your business for R500,000. It's very, very expensive capital. So if you can prevent that and rather bootstrap your business, you can go to family and friends. And when you go to family and friends, it's really that you've got to be comfortable that they are comfortable that if you lose their money, you'll still be family and friends. They've got to understand that it's a significant risk you are going to lose their money. And if they're happy with that, nothing wrong with going to family and friends. But they've got to understand there's a risk they're going to lose the money, and you don't want to jeopardize your relationship with those family and friends. If you've got them, fantastic. If you haven't got them, you might find a lucky angel that's prepared to put money into you, but lucky is not a strategy. I would just say, just bootstrap, do it out of your garage with an iPad and, just a broadband connection, and get customers. Just get customers. If you can get a few logos, get a few paying customers, and I'll tell you something, the reverse will happen. If you give up equity too early, you're going to go in there with absolutely no power. So the investor's going to give you terrible terms. They're going to give you a terrible valuation. It's just going to be a bad deal all the way through for you. And you're going to live with that bad deal till the one day you try and sell the company when you own 2% of the company. And you're going to question, was it really worth it? But if you can just go a little bit longer, as you said, just get around that corner, get to enough customers, and show a month-on-month growth. So 10, 20, 30% month-on-month growth off a few customers. I tell you something, the people like me will be knocking on your door. And the difference now is you'll be the boss and I'll be the beggar. You'll be the king. You'll dictate the terms. You'll dictate the valuation. And I want a piece of your business because you're doing all the right things. You're showing the growth. You've got this great customer list of blue chip clients. You're growing 20, 30% month on month. Your technology is unbelievable, innovative. It's 10 times better than anything else in the market. That's when you go and raise capital. And that's when you get multiple term sheets. And as soon as you get a term sheet, is something that a venture capitalist or an investor will give you once they make an offer to your company. It'll spell out all the terms. It'll spell out the valuation, the economics, the control terms. But once you've done that, you will control and be the boss of that term sheet, opposed to your investor being the boss of the term sheet. And that's the best advice I can give you. And everyone say, but Clive, I need money to grow my business. Well, maybe then you're in the wrong business. Because if you're in a very capital intensive business, I'm going to go and cure cancer, or I'm going to build the next, power station. That's not the type of business for you. It's too capital intensive. You'll never do that without, hundreds of millions of capital. But to start a technology business today, you can start out your garage and you've got 7 billion clients that are potentially clients of yours out of your garage. So you can build a big business with clients all over the world and really spending, thousands of rand opposed to hundreds of thousands or millions. So that would be my advice is try and hang in there, try and bootstrap, and then you'll give away a very small percentage of your company if you need to raise capital, because you might even get to cash flow positive and you don't even need to raise capital until maybe a much, much later stage when the valuation has gone up significantly. So don't believe raising venture capital is not a sign that you've got a successful business. It's not a victory lap that you do when you raise venture capital. It's just a stepping stone in the progress of building a big company that you're going to exit one day. But try keep it. I say this as a venture capitalist. Try and keep it as late as possible before you approach people like me, and then I'm knocking on your door to give you capital.
Oh, that's great. And one thing I've also heard from, or I've been taught from one of my mentors, is that the people that have equity in your company is also, it's like a marriage, and you should be really certain of who you marry. And So it's a, a great point that you made. And so you are personally invested through a company or personally through in many different industries and different businesses. So where do you see, for those looking for ideas and working on ideas, where do you see a lot of opportunity in the next 5 to 10 years, and especially in South Africa?
You know, I see opportunity everywhere. I mean, wherever you go, you see opportunity, and particularly, to solve African problems, because we've got so many problems. You just take fintech, payments, insurance, whatever it might be in the financial services space. I mean, there's 1.2 billion people living on this planet. Only a few hundred million have access to credit cards or bank accounts. So it creates such an opportunity to provide services to underbanked or non-bank people on this continent. And South Africa includes South Africa. So there's endless opportunities. And typically to find opportunities, you should find things that solve problems for yourself. Because if you find a problem or find something that really takes you too long, or there's no solution on the market, and you solve the problem for yourself, that's probably the best story you can ever tell an investor one day. Is, I had this problem, it's a big problem, there's a large target addressable market, I've developed this innovative technology to solve it. And that's a great story to tell. So it might be your problem, or someone in your family's problem, or someone that you know's problem. Or you just have to start ideating. Go and speak to customers. If you know the retail industry very well, go and speak to customers in the retail industry and say, what keeps you awake at night? What's cumbersome? What's taking you too long? What pain points have you got that I could potentially solve? And just by doing that, you can, and without spending any money, don't spend any money. You go and do it on a wireframe, or you go and do it on a PowerPoint presentation. Go back to the customer and say, if I had something like this, would you buy it? They say, wow, absolutely, I'd buy it. How much would you pay for it? I'd pay up to, whatever. So would you pay 50,000 Rand a month? I'd pay 50,000 Rand a month. Then you're onto something. But go and speak to 100 clients who say, and 90 of them tell you that you're onto something, and you haven't really spent a cent in developing any technology. Then you go out and you start developing your solution, and you take it back to them the whole time to get feedback. That customer development, that Steve Blank talks about customer development, customer validation. So once the customer's validated what you're doing, then you start developing the customer by solving their problems, because they've told you they've got these problems. So the best thing is to get out the building, because there's no, whatever business you're in, there's no problem sitting in your building. They're at the clients. But if you are a banking expert, go and find out what's problems. You know what problems are in the banking sector. If you're an insurance expert, you know what problems are in the insurance sector. And you just got to just find some people to brainstorm it with. Find some people that people that you trust, because you don't want them stealing your idea and running off and building it. And bounce it off them and seeing what they say. And then, and honestly, often you'll find an idea that maybe the first one doesn't work, but you'll get great experience. Maybe the second one works, or the third one works. But you've got to get out there. If you don't take a swing, you're not going to hit. So there's lots of ideas out there. The challenge is not a lack of ideas. The challenge is lack of execution.
Yeah, no, exactly. And I think the nice thing is, with every problem, there is opportunity. And with every need, there's opportunity. Just excuse the plane flying over us. But yeah, so just a few things standing out, and even what I've learned in FinMeUp and through my various other ventures. You should not try to build a solution and then try and find a problem. You should start with a problem and then build a solution. And I'm also personally a firm believer in doing things that don't scale. So I remember with our first 50 clients that downloaded FinMeUp, the first app, the MVP, I remember just doing one-on-one sessions with them. And the ideas you get from that, and I think it's a great concept of the MVP, the minimum viable product, where you just go out to the people you think you're solving the problem for. And it takes a lot of guts, but you just have to talk to them and find out if they'll be willing to pay. So that's great input. Thank you very much, Clive. And if you really want to follow someone, to the people that's watching this, if you want to follow someone and you have a business or want to start a business, Clive is definitely someone amazing to follow. We'll link his LinkedIn profile, and every day you can just go check out what he's posting. Thank you so much, Clive. Really appreciate it.
No, absolute pleasure. Thanks for the time. Appreciate it.
Awesome. Thank you.
Great. Cheers, okay. Bye.
Yes.